Hi and welcome to another daily recap. This is day 57. I'm doing the daily recap of for EU. So this is July 15, 2024 and it's Monday. Today I didn't get any trades today. So I think today is a very useful lesson because I did a blunder today and I escaped from a loss. So I'll just tell you I what mistake I did and what it should be avoided in the future. So let's start with the forex factor news, and we were having red folder news at 1:30, but it didn't create any impact on the market. So let's start my pre-session analysis. This is a daily chart, and the daily swing is bearish, and the internal is also bearish. This is the internal structure. These red lines. Sorry, internal is now bullish actually because internal is now shifted bullish. So so once the internal shifted bullish means uh, most probably the price will go up and take out the swing high. So that's the most highest that's the expectation that I am having. But the price is still in the daily supply. So the price can react from this daily supply and then it can start to come down to take out the weak swing low. So if this supply fails, then I would reanalyze the situation whether the price can take this strong swing high or not. So for now, the price is in the daily supply. I'm strongly anticipating the order flow to shift bearish for the price to take out the weak swing. I'm expecting the order flow to shift bearish. Expecting the price to be bearish today, as I'm expecting the price to mitigate this demand to either flip it or react from it. So anyway, to flip it or react from it, so I'm expecting the price to either mitigate this supply in demand and go up, as I already discussed earlier, or flip it and then it can start the phase A short, I mean phase A market, the phase A. So I was ready for both the scenarios, but before that, I wanted the price to come down at least to fill this fair value gap. So my daily bias is bearish, simply. This is a 4 hour, this is the strong swing high, and we are having swing low somewhere there. But this is the internal structure, and the internal structure has shifted bullish, and we are continuing this bullish structure. Most probably, this strong swing high would be taken because the last level of supply was being flipped. So I am anticipating that the price would move higher and take out the strong swing high. Price is still bullish in the small internal, so I have a strong conviction that the price may take out the 4 hour swing high as it flipped the last level of supply. Today, I'm anticipating that the price would come down to mitigate the 4 hour demand or take the sell side liquidity below it to fuel its way up. So this is the sell liquidity because it's a fair value gap. So I'm expecting at least, and this is one single leg, and this demand could fail because it does not have any lid. So the only liquidity available would be below this POI. So what I'm expecting is price to sweep this liquidity and then push up to take out the 4 hour swing, strong swing high. So let's jump into H1. So H1 is swing is bullish, internal is also bullish. There was this gap down here, and there is this bearish divergence. So no significant high time frame supply zone from which the price can reverse from. So there is no high time frame supply. So the only option for the price to is keep continuing going up using the internal resistance liquidity. So price is now coming down to mitigate the 4 hour demand to fuel its move further up. Yeah, actually it's coming because so this coming down is confirmed by this bearish divergence and the sweep of the Asian highs. So I could have taken a trade here, but it's not my analysis. So my POIs would be only the supply and demand zones. So for you, the POIs can be breaker blocks, fair value gaps, mitigation blocks, anything. So to keep it simple, I just trade supply and demand. So waiting for the price to sweep the Asian highs or fill the fair value gap and then make an order flow shift to confirm the bearish move down towards the bullish. So as I was writing this uh, note, price already made a bearish SMT, swept the Asian highs, fill this fair value gap slightly, and then it pushed down. The price took the Asian highs and fell lightly with weekly fair value gap down with a bearish SMT divergence. So double confirmation, the price is going to go down. I'm currently looking for the H1 fair value gap to take shots. The price makes a bearish drop. Okay, if the price moves down here, so most probably there will be a fair value gap form. So I can take entries from here because where we know that the price is going to come down. So why to waste this opportunity? Or what I'll do is I'll take uh, the consecutive candles and mark that as a supply, and then I'll take shots from that. But price didn't take out this Asian eye, just went up. Here, what I should have done is, so this is a valid inducement as it was formed yesterday. Okay, price mitigated the H1 supply, waiting for the entry model to show up itself before jumping into the trade. This is an invalid inducement as it was formed yesterday during spread hours. Thus, I'm being patient, waiting for the LC to emerge. So this is a huge mistake that I did yesterday. You can see the price was actually bullish, and it has completed its pullback. It has tapped into the equilibrium, and now it has also changed character. So this is the you can see the price has changed character. So expecting shorts after changing character is against is low probability. The two expecting a short after the price made a changed character and made a huge bullish run. I'm expecting short from there. So this is the weak high which will be taken anytime soon, right? So I am trading from a weak high. So very high probability that I'll be in the losing side. I'll be in the wrong side of the market. I didn't realize that because I was very stubborn about the bias that is the price is going to go down, take out this liquidity. I was very stubborn about that because also price didn't take out this Asian eye and there was some equal lows formed. So I was adamant that the price is going to come down. But one thing I didn't notice is that I was trading from a weak internal high. Definitely it could have been losing trade. Thankfully I didn't get any entry models yesterday. The price just went up, started to going up, and it liquidated the 4-hour swing high. Price liquidated the 4-hour swing high. This is at 12, exactly at New York start. Forex order flow is still bullish, thus I'm looking to follow the bullish order flow till the price makes a change of character or reaches any significant daily supply. But there is no daily supply. Yeah, thankfully I didn't get any entry models here, so price just went up, made an I was. Now I realized, okay, price is going up, so I must change my bias. Since price liquidated the 4-hour swing high, there could be a ton of liquidity for the price to move down. Now it's a bit high probability that the price can come down because price has liquidated the strong high. So a ton of liquidity will be there, buy stops will be there. So at the time I must follow, at the same time I must follow the H1 order flow as it is a medium probability A to loans. Because there is no supply to resist it, 4-hour swing has been liquidated. The price can, and there is no daily supply to push the price forward. So there is a clear path for the price to go up. But currently, yeah, just is the POI that I was interested when the price comes down, I could take some longs. But this is at 12, right? So 12, 13, I mean 12, 13, 14, 15, only three more candles, then I'll be off the risk. So even if the price mitigates this, it will take a lot of time to make the entry models. So definitely it's it's clear that I'll not get any trades to within my time window. I didn't leave the desk, but I was still observing the market. This is three. Price didn't come to my POI, it just consolidated, and then that's it. I was off the desk. Price still didn't come to this POI today also. I'll show you the market. Yeah, actually, price went down, went up, liquidated, and then started to come down. So this is strong high. So today I'm expecting the price to take out this strong high, which means internal pullback is officially started. Then I could look for shorts so that the price could come down at least to this equilibrium point. Yeah, second. Okay, let this equilibrium price can go to this equilibrium point. So let's see what the market has for me today. But this is yesterday, and there is no trades. The only mistake I did is I did that blinder, which I must change so that I won't repeat this mistake again, and I won't be caught in the wrong side of the market. I was so abundant in the bearish bias that I was trading with a weak high behind me. Thankfully, I didn't get any losing trade yesterday. Anyhow, very good lesson learned. So definitely this is a very good lesson. Thank you guys. Bye. Hello, and this is daily recap. Here, this is day 57, and I'm going to recap gold versus gold. I mean, gold versus US dollar. And this is July 15, 2024, Monday, and there is no trades today, guys. So let's start with the analysis. So I'll just give you what happened today. So how did I analyze the market? What actually happened? So why there was no trades today? So all the answers will be there in this video. So let's start with the daily. So the this is daily pullback has finished actually because the price started to the internet started to shift bullish. So this is a daily week swing high. So most probably this swing high will be taken with this current order flow. So swing is bullish, internal is bearish. So internal is also bullish, fractal is bullish. Expecting this price action to hold till the price takes out the daily swing, weekly swing high. So that's what my expectation is. So this is the fair value gap formed, and there is this POI, which the price can come down, mitigate, and then go up to take out the daily week swing high. This is the 4-hour chart. Okay, I didn't take a screenshot properly. Anyway, you can see this is breakout structure and the upswing was up. And sorry, this is 4-hour swing low. This is strong and this is weak. So price is moving towards the weak swing high, and the internal is now bullish. So I'm expecting the price to come down, mitigate this area of demand, and then liquidate this liquidity, I mean, this liquidity pool, and then price to, and this would be a weak high to be targeted, and then boom, taken out. So swing is bullish, internal is bullish, small internal is also bullish. So price has now reached the premium pricing support and swing structure. Thus I'm expecting the daily supply to hold and bring the price. Wow, wow, I think this is wrong. Why should there be a pullback? This is swing, a mistake. I click this one. I'll use the lower time frame to guide my session direction. So this is H1, and you can see there is swing breakout structure on the upside. Internal is also bullish. So since both all the time frames are saying bullish, I'll there is a medium time frame high time frame support. So and there is no high time frame POIs to restrict the price from going up. So what I'll do is continue the A2 longs as long as as long as the price makes a strong shift down. This is a zoomed in version, and you can see uh, the swing is bullish, internal is also bullish. I look to follow the now the price is looking to come down. Thus, face the shorts are high probability now. Why it's high probability now? I think I made a mess of this analysis. Maybe yeah, I think because of this supply which I marked here, the total analysis got collapsed. Because even this supply doesn't make any sense, right? This is a weak swing high. Anyway, the supply is gonna fail. So yeah, phase T shorts are not high probability, but they can phase T shorts are medium probability, and we can expect the price to come down to mitigate this 4-hour demand. So we can use that shorts to come, expect the price to come down, take out this sell side liquidity. This low failed to take out the high, thus it can be rated today. So obviously, one more possibility that why the price can come down. I look to follow the bearish order flow till the price rates the sell side liquidity and mitigates the 4-hour. At least here I am correct. So then price can go up like this. The first session update. Actually, price when as soon as the price took this low, this POI, I was interested in this POI. So I was looking for an entry model here. Price mitigated the H1 supply, waiting for the entry model to show up itself before jumping into the trade. This is one straight push down, and there is no opposite color candles or there is no pullbacks. So there is no M15 lid, and also there is no H1 lid. So obviously the only liquidity available would be up here, and that got traded, and the price mitigated the one more supply, but the order flow shifted to bullish. And then I realized price took the Asian lows and flipped the supply, looking to follow this order flow to take out the previous week's high. This would be A to long 15 probability. There was no again I was lucky yesterday because there was no entry models here. If there was entry model, I would have taken this trade and would have been a loss because my analysis is wrong. Right. Now I was clear, price took the Asian low and it flipped this area of supply. So I didn't consider this supply. I was expecting the price to come down and then push up because this was previous week's high. So now now I'm coming in align with the information provided by the market. Previously, I was misguided because of the daily supply that I marked, which I forgot to delete. Now I'm coming in line with the market. So this was my game plan. Yeah, it's a good one. I look to follow the bullish order flow to take out the previous week's high liquidity, but the price did not mitigate any of the demand to take longs, at least. Thus, I'm leaving the risk with no trades. Thought of placing risk entry using H1 PY, but it's not worth it. There will be another day, another day. So this could have been a good trade. I'll show you. No, actually, that's not a good trade because price didn't get that one. Actually, price came down, but it didn't take out the one sec. Yeah. Okay, I was aiming for this PY to be tapped, which means I was aiming for this PY. Yeah, this PY, which unfortunately price didn't come to, and now this itself became a PY. And the price took the previous week's high, obviously. The price took the previous week's high as expected. That's what the expectation was because a previous week's high is a strong liquidity point, and it took that one, and that's it. Price started to move up. Okay, yeah, this is I actually gave the screenshot right there. So here also, one blinder misanalysis. I could have ended up in a losing trade, wrong side of the market, but thankfully there was no trading setups. Sometimes even no trading setups is also good because it could save you from a wrong analysis point of view. So today is a very, learn, useful trading session because I learned a lot about my analysis that I must be very open-minded and look for clear biases of the high time frame because the high time frame is the one that narrates me to the low time frames. So once you come to the low time frames, I won't see any POI markings. I'll be seeing only the medium time frames marking with the high time frame bias in mind. If the high time frame bias is wrong, then my medium time frame POI selection will be wrong. Then obviously I'll be entering the wrong side of the market. So it all adds up. So yeah, let's hope that I don't make any mistake in the future. Thank you guys. Bye.